Yes, guys, welcome back to another Capital Convos. Today we have an absolutely special one. So we have a special guest. We're not going to reveal him as of yet, but he is an amazing, amazing individual. Firstly, obviously, we have the main man, Mark, over here with us.
You good?
Yes, Mr. Mark. So we've got a lot of suggestions from a lot of viewers that have come in. And one of the suggestions was actually to bring this individual on as well. So he's going to be joining us in a lot of the topics that we do mention today, as he has, being his age, he's got a lot of experience, regardless of, how young he is or how old you think he is as well. He'll obviously introduce himself too, but this guy, trust me when I say this, is an amazing individual doing a lot of big things that a lot of, other people haven't even been able to accomplish. And sometimes I wish, when I look back at himself as well, at his age, I wish I was doing exactly the same thing because, at those younger days, I was nowhere near the same path that I'm on now. However, as long as he sticks on the right path, and he found it very, very early, using all the resources that we have out here today, trust me, he'll also inspire you guys to do exactly the same, using all, like I said, all the information and resources that we have out here today. So I'm going to let him introduce himself. Here is Drew.
Hi, guys.
Drew.
Mr. Drew.
Hi, guys. Hope you're all good. Yeah, Drew here.
Loving that smile.
But yeah, I mean, thanks for having me on, guys. I know there's been a few people from sort of FHC and GMC have asked for this, and yeah, I'm sort of blessed to be on here. I'm looking forward to speaking about my journey, speaking about my sort of views and my spins on things today. And yeah, let's get going with it.
We interrupt this program to bring you a special report.
Introducing Capital Convos.
Sweet.
Perfect. So very short and sweet and very snappy. But you guys will get to know Drew as we move along in today's session. And if you did, or if you do enjoy him on this session, or if you don't, you can absolutely say it in the comments box below. It's not a problem. But yeah, make sure you do smash the like button right towards the end, and just give us your suggestions how Drew done today. But firstly, we're going to move on to mental health. I'll talk about it in a general aspect. This is actually put in by a couple of viewers, and this isn't just one viewer. In fact, first I took it up on one viewer that does regularly plug in all the time, but then I started hearing it from a few different people as well. Mental health. I'm going to talk about mental health in a bit of a general, broad aspect, and then Mark and Drew will start to refine it more towards the financial side of things. So mental health, I was asked by a viewer to speak about this based on what is taking place in this current situation in lockdown. Yeah, we're stuck behind four walls right now. Yeah, there's not much we can do. There's only certain places we can go, only certain places we can visit. We aren't able to continue our daily routines as we used to be able to, many, many months ago or years ago, in fact. Yeah, things have dramatically changed, and this has knocked a lot of people out of their, general lifestyle, their general habits. Even myself, I'll be completely honest, we aren't able to even use our offices at sometimes, if there's more than one or two people there. Yeah. In fact, that has changed our whole our whole approach on our business. So some people, some of our staff members have found it so much easier, in fact, now to be working from home. I've started to adjust working from home as well, working from my apartment or working from my parents' house. Yeah, I've started to adjust to do these things. The other thing that I do find tough as well is I prefer doing business in person with people face to face. And I aren't able to do that anymore because of, not being able to see anybody. However, the benefits of this and the benefits of 2021 is that, technology today allows us to make a video call anywhere around the world like we are in front of a person. So you can see in both ways. You can turn your negatives into positives. Yeah, we can keep complaining about these certain things that are taking place, but there are certain ways of dealing with them at the same time as well. Yeah, it just depends on our outlook of our own brains at the end of the day. Yeah, our own perspectives, how we see things compared to how others see things. And as long as we're looking at it from a different point of view, yeah, we will always be on top. Now, how does that affect mental health? Yeah, you know, everyone is used to their daily routines, including myself. I haven't been to the gym in months, yeah, a long time. And, you know, I was pretty much there all the time. If you ask Mark, you know, he'd message me after, even at midnight, sometimes I was there. If I couldn't sleep, I'd go smash out a workout, yeah, have some protein shake with some milk and go straight to sleep. Trust me, it's one of the best sleeps ever. That I, you know, one of the best remedies ever. If you can't sleep, just go smash a workout, come back, shower, and you'll be dead. Yeah,
I need to
completely
do
gone.
that. Guess I'll have to do that. I can't sleep.
Yeah, definitely. And you know, Drew is a gym goer as well. He can also confirm the same thing. You know where I'm coming from. So it has.
Absolutely. I mean, especially coming from an aspect where if you're in such a routine life, I mean, like you get up, you train, then you carry on with your day-to-day sort of thing. Having that one thing removed from your day, I mean, well, it's detrimental. So, like Ad said, it's just adjusting, especially from the gym or just however your daily habits are, you know.
Yeah,
Yeah,
definitely. I
100%.
totally agree. And you know, it has caused a lot of people to go into a certain mental state that they aren't used to being in. But I've noticed it happen more this lockdown than any other lockdown before. Yeah, even sometimes, like when I'm waking up, sometimes I feel demotivated, but it has to come from within. You know, we're all human at the end of the day. Yeah, none of us are robotic. All of us have feelings. All of us have emotions that we have to deal with at all times. It just comes down to the fact on how strong, or you know, how much able you are able to deal with your own emotions, your own problems. Everyone has problems. Yeah, you might look at us, especially you guys, you viewers, you might look at us and think, you know what, these guys are killing it, they're loving life, but we have problems of our own every single day as well. Yeah, it might not be bigger than others, but it's also pretty large in my sense. Yeah, I could spin my car out at any moment and kill myself. You know where I'm coming from.
Yeah.
Yeah, and Drew is definitely witness of that as well. Yeah, if I take it too far and I don't know the power band, I could end up killing myself. You know where I'm coming from. Yeah, other
Yeah.
people have different kinds of problems that they have to worry about as well. Yeah, on a daily basis. Some may be financial. Yeah, some may be, you know, health wise. I'm definitely, you know, hitting a bit of a health plateau at the moment due to the fact that I aren't able to train as much as I can. So I'm trying my best to maintain, but it still is not as great as it would have been if I'm able to burn those calories at a faster rate. Does that make sense? So, yeah, what are your guys' views on mental health and coming down, you know, narrowing mental health down to more of a financial point of view?
Drew, after you.
Well, to start with, the game we're in and the nature of it, you know, it is inevitable you're going to have losing days and potentially losing weeks to begin with. That's how I'd sort of like to start on this. And considering we're in a situation where, as Ads has mentioned, we're in four walls and inevitably you're going to get demotivated. You're going to feel a bit crap. You're going to just feel like, do you know what? This isn't how I was living my life this time last year or the year before and whatnot. And that, I think the main thing to focus on is that's completely normal. That is everyone else in the UK right now is in those exact same shoes where they're sat there going, I feel like this and I'm demotivated or I even feel low or you know, I'm unhappy with my lifestyle. And that's everyone is feeling the same thing. And unfortunately it's you know, it's how life is at the minute, but we have to sort of remember it is temporary, you know? And from a financial stance and bring it back to, you know, in this nature of the game, we'll have losing days and losing weeks. Those losing days or even a losing trade or whatnot, they'll feel 10 times worse. Or even though everybody says in this game there's no emotions and, you know, you've got to be sort of robotic and systematically approach the markets, you know, it's understandable that some people could feel those losses a bit more or let themselves get stung a bit. And again, that's normal. And I can understand if someone had a losing week or a losing day or whatnot, how it would feel 10 times worse because of your emotions are heightened in four walls. You're not speaking to friends, you're not going out, you're not socializing, your mind's not distracted. And essentially, because you have so much time on your hands, you'll overthink things and things like this. And the point I'm making here is that's completely normal. But one thing to remember is losing days are completely inevitable. So are losing weeks, or I say that they're likely. And from a financial stance, you know, just remember that this is temporary and just remember that just to keep persevering, that. And as we all know, if your risk management's okay and you're hitting the 2-to-1s or 3-to-1s or 4-to-1s or whatnot, these losing weeks will be forgotten about when the rest of the weeks are smashed and it was just a blip or things like that. So the point I'm highlighting here is don't let the current situation you're in affect your sort of outlook on your career as a trader or as an analyst or whatnot.
Yeah, I totally agree with that. Definitely. And I think, you mentioned one point where, people are comparing their lives to where they were last year or the year before. And I totally agree with that. And it's not just that as well. People are comparing their lives to others' lives. Yeah. They see on Instagram people out of lockdown in different countries. And, they really want to be those kinds of people. I know. Yeah, every single influencer I know is in Dubai right now. Yeah. But at the end of the day, are they in a better place than us? Yeah, it might look better, but just remember they're spending way more, whereas we're able to invest way more over here. Yeah. Look at it two ways. Yeah, we could be spending also, all that we're earning in Dubai right now. Yeah. Because Dubai is very expensive on a daily basis, even if you're just buying food. It's just expensive to keep up, to things over there. It is what it is though. Yeah, it is an expensive place and you sign up for that when you go there.
Yeah, 100%.
But it will also hold myself back in terms of working and hitting my goals for this year. Yeah, I could have chosen to go there. So many people have invited me, come out to Dubai even for a couple of weeks and then fly back. And I'm like, you know what? This will slow my progress down because I have certain things to achieve this year and they will not be achieved if I even take 2 weeks out right now. After about 6 months, then I'll, start allocating different holidays. Yeah, then I can decide wherever I want to go, no problem. Yeah, I don't have those certain burdens on my head that I put on myself, to be honest. Nobody has put those burdens on my head. I'm keeping myself accountable for these things. Does that make sense? But yeah, go ahead, Mark.
I was going to ask you, Drew. So obviously for the viewers and for FHE and GMC and the whole of everybody who's watching, in terms of trading, how would you manage your emotions? Because obviously it's not very well taught. Like whenever you go to different courses or different mentors, they don't really talk about actually managing your emotions when trading. So what would you recommend for new people or experienced?
There's one tip that I was given going back about 3 years now, and it's stuck with me and I use it daily. You can get a simple Excel sheet up and you can simply input the power of put your account balance in 2-to-1. And let's just say you lose 1 in every 3 trades. There's an Excel sheet that will show you how over time, if every 3 trades you take, if 2 of them come in, or even if you look at the power of if you're going for 4-to-1s, for example, it's all drilled into your trading plan. And 2 trades are coming in at a loss and 2 are coming in at positive, and how that will compound over even 3 months, then 6, 9, 12 months. Then you're looking at it on a 5-year basis, because we've got to remember this is a career. We're traders. This isn't just something you're going to do for a month or 2. You're looking 5 years ahead and you're going to grow this account and you're going to compound it and you're going to treat it just as this is your career, so take it seriously. And if you step back and look at it from a non-emotional financial stance and you go, okay, cool, this is the power of compounding. Let's take emotion off the table a sec. Even if I, take up 2 losses in a row or 3 losses in a row, the power of compounding on an Excel sheet, it will show you no matter what, if you take emotions off the table and you stick to your trading plan and you keep going for your 2-to-1s, your 3-to-1s, over time, you'll be a profitable trader.
Makes sense.
And it's as simple as that. It's just looking at the figures and going, it works. If it works on paper, it'll work in person.
So what would you give for people who, because I know a lot of newbies who get into trading and they don't understand the lot sizes. So they'll go for, let's say they have like a £250 account or a £500 account. They got crazy amount of leverage from their broker. You got to remember the broker's always against you. Right. So they're whacking 0.5s, standard lots, and then they're wondering why they're losing. So how would you get over, what would you tell somebody who's in that kind of mindset of using the higher lot sizes to gain and not to gain the money that they potentially won't get? What knowledge would you say to them?
There's two ways I'll answer that. The first one is don't ever take a trade or don't ever step into a situation you don't know the best and the worst outcome. Because 100%. If you don't know the best and worst outcome, you can't plan. And that's in life in general. And that's in business in general. Before I make any move, any business move, any deal, anything, I sit there and I say, if this goes worst case scenario, where am I standing? And if this is the best case scenario, where am I going to progress from this? And how am I going to invest my resources? And the second part to that answer is those losses you'll take, and I understand them early on in your career where you take them and you go, ow, wow. I mean, my first year of trading, I lost like £6,000-7,000 in the space of like 4 months. All right. Trust me, I understand from the aspect of ouch, that hurts. Right. And the best advice I'm going to give is A, I know we will bang on about risk management, but B, please learn from these mistakes. Don't just take a mistake and try and double up on your next position. It's not how, this isn't how this game works. And it's the same again in business. If you make a mistake, you won't try and rectify it by doubling up on your next move. You'll actually take a step back and analyze what went wrong there. And how am I going to, if I was in that situation again, how would I have done things differently? And from there, you start essentially your back testing then, and just learn from your mistakes and use that emotion to fuel you rather than get you down.
100%.
Totally. I definitely agree. I'm going back to the point of weighing up both scenarios. In fact, I know a lot of people who don't do that. And the first thing that I actually look at is how much am I going to lose on this trade rather than how much am I going to win on this trade. And that is where you step aside from the other 95% of the other people investing in, whether it's in investing, whether it's, day trading. Other people aren't looking at that aspect. How much are they going to lose? They are only looking at how much they are going to make. After being here for over 6 years now, coming up to 7, in fact, coming up to 7 years, it has built into myself, very, very strongly, because after all the mistakes that I had made over and over and over again, eventually, obviously, I ended up learning from it. And I learned not to do what everyone else is doing, and everyone else is looking at how much they're going to make, not how much they're going to lose. If you're always looking at how much you're going to lose, you will make automatically if it goes your way. Regardless of what happens, you'll make it in the long run. Even at the end of the week, you'll be up. At the end of the month, you'll eventually be up. And at the end of the year, you'll eventually be up. As long as you're trying to look at how much you're going to lose at all times and trying to minimize that to the best of your ability.
I think I saw a quote as well that a hedge fund manager said about you have to minimize your downside to maximize your upside.
I totally
think about how much you're going to make. So I'm going to make, let's say, £100 off this trade, but how much am I going to lose? Am I going to lose £30? Like maybe your account can't handle that. You have to minimize the downside because the upside will come. You're always going to have winning trades, right? But if you're using these high leverages, these crazy stop losses, like 50, 60 pip stop losses, obviously I hope you're doing that, but it's mainly the leverage that's always fucks people over. But the thing is, you have to actually just minimize that downside. 20 pips is the max I'd go for a stop loss. 20 pips, that's my personal. Like it obviously depends on the pair. If it's like gold or GA or USD South African Rand, it's going to be a little bit more, but then my lot sizes will be slightly smaller to counteract that volatility. That's how you counteract it.
Yeah, absolutely. Because the thing is, in essence, and I'm being very hypothetical here, but your stop loss could be 100 pips. It's your lot size and your risk management that kicks in. So if the setup's there, say you're going for 2,000 pips and your stop loss is 100 pips, right? And it's, oh my God, it's the best thing since sliced bread, risk to reward, cool. But it's that you've done all the analysis and stuff. Now it's time to be a risk manager. Step into the shoes of the risk manager. Okay, whereas you would have placed, I don't know, 2 lots on that short if you had a 10 pip stop loss. Now you're obviously going to have to reduce that because your exposure to the downside is a bit more. So it's just about managing your risk.
I totally agree with that. And you know what? Drew actually mentioned a really, really good quote. I can't remember who it's from. Go ahead, Drew. Also, by the way, make sure you write this down or take notes of this, because I forgot to mention that Drew is actually the youngest or one of the youngest hedge fund owners in the UK. Woo! So when I say he has achieved big things at his age, I'm not talking about anything like small time. So what was that quote that you mentioned to me as well, Drew, that really, really hit home, man? It was about risk managers, or not everybody is a trader. We're all, what was it?
It was, I want to get this right now. It was basically along the lines of anybody can be a trader. Not everybody can be a risk manager. And it was along those lines. I will dig out the quote and we'll put it in the link or the bio of this video. But it's basically saying, look, anyone can click buy and sell. Anyone can click buy and sell. My nephew, I could give him my phone, click a pair, take a buy, take it.
Yeah.
That he's a trader right there. He's a trader, but he's not, because it's all about that risk management. So not everybody's a trader,
I totally agree.
Risk management.
100%. And me and Drew always have this conversation as well. We might be looking at the same thing in two different aspects. Usually we're always on the same page. But sometimes we might be looking at the same thing, and he might see a sell, I might see a buy. But we have two totally different strategies. Well, I think we do have a very, very similar strategy. But you know where I'm coming from. Let's say it's not me and Drew. Let's just say it's me and somebody else. Or let's just say me and Mark, because, Mark is a long-term swing trader, for instance, and I'm, a short-term trader, day trader, or I'll close up every day or I might hold out for about 3 days max, myself, and then bank those profits, and then move on to the next opportunity. That's just, what I'm like. So you might see something going long-term downwards, but I might see, a 40, 50 pip opportunity going upwards. Doesn't mean you're wrong, doesn't mean I'm wrong. We're both right. But we're looking at two different things, on with two different eyes. It could still go up, hit my TP, and then go flying downwards or dropping and smash your TP.
I agree.
We'll both be right.
100%.
And to add on to that, I think this is where the quote, I remember having this conversation with you now, and I was basically saying how, person Y could be a buyer on the 1 minute and person X could be a seller on the daily. Both are correct in their positions. Both will enter the market and leave the market with profits and money in their pocket. Both had a bias that was correct. Both had two different views on the market, but both successful. So, and this comes back, it links to the whole Instagram thing. When people see someone take a position on Instagram or on things like, someone, I've just seen X, Y, and Z take a sell and I'm in a buy. Oh my God.
That's
like,
DJ.
And the matter of the fact could be simple as you're analyzing on a certain time frame, someone else is on another time frame. Both you could be correct. Always stay in your lane and stay at how you look at the charts.
100%. And that goes back to some of the people that used to call me saying, should I buy gold? You could buy gold, you could sell gold. It's completely what you're looking at. I'm looking at it completely different to you guys. So you know where I'm coming from. If you think gold is a sell it. If you think it's a buy it. As long as you've got your risk management in place, as long as you've measured your parameters, how far you can actually go before you decide to cut this trade off, go for it. You don't need to be going around asking questions to people when they see things differently from your own eyes. I was actually on with a student yesterday, in fact, and this student is absolutely amazing. They've picked up things very, very quickly. I won't mention any names. This student is really, really pretty much on their way up right now. And the reason for that is obviously they've put their own strategy into place. They've built their own strategy in their own way, and whatever works best for their own psychology and their own mindset, they're completely working at through trial and error. So it is a constant learning game at all times. As long as we are constantly pushing ourselves, not giving up. It's like golf, Drew, isn't it? 100 balls a day. You will kill the progress rather than smashing 1,000 balls in one day, and not playing for 10 days. It's more progress smashing 100 balls a day for the next 10 days, than smashing 1,000 balls in one day. And why is that? Because it builds muscle memory. The same thing when it comes down to trading, investing, and all sorts. It just builds your muscle memory in a certain way.
Makes a lot of sense.
I believe that's called neuroplasticity, and it's the more you do one thing over and over, the more your brain will spot that one thing over and over, and the more elegant it'll do it, or at ease, it'll just do it at ease. Your body's and it's like if you pass a rugby ball, pass it 100 times a day. Same with golf. It's the exact same with trading. If you're looking for, I don't know, you trade three sort of ways of looking at the market, if you like. I don't want to say patterns, but if you're, if you're always looking for an order block on a certain time frame, or you're always looking for a liquidity hunt on, I don't know, the daily or the weekly, whatever. If that is your go-to, then your brain will always be looking for that. And the more you do it, the better you'll get at it.
100%. I totally agree. Yeah, moving on to the next topic, in fact. Yeah, this has been put in by another viewer as well. By the way, all of our topics have been put in by viewers. Yeah, we only do topics for you guys. We only listen to you guys. And, we want to try and get as many people on board watching our podcast as possible. And even if you guys only benefit, like I said, 1% from this whole 1 hour podcast, we have done our job. Does that make sense? Yeah. And we're actually going out of our way. We're not getting paid for this at the moment at all. Yeah, we're literally putting out free value that we have gained through years and years of experience. So moving on to the next topic, which is big in Mark's eyes, in fact, as, I definitely see him as somebody who, would be very knowledgeable in this field, is the future of the dollar.
Yeah.
Now, based on data, he's a very good data analyst. And he looks at very, very much every currency, not just what its strength is right now, but what makes the strength of each currency.
Yes.
So future of the dollar, I'll let Mark start off, and then the rest of us will
the dollar. So if you look at the DXY chart at the moment, since March, it's been crumbling. So there's a reason for why it's crumbling. So first you have to understand why it's crumbling, what caused it. So obviously, as you know, COVID. And there's obviously certain things that the Fed and the government do that weakens the currency. So I know Drew looks at pretty too much the same kind of data that I look at. The main indicators for me of weakness are M2 money supply, so the growth of M2. We've got inflation, so CPI and PPI. We've got the PMIs, so the Purchasing Managers Index. So you've got the manufacturing and the services. You've got the central bank's balance sheet. You've got GDP. And I'm trying to think of you've got interest rates. Interest rates are, they predict stuff that's going to happen in the future.
How about housing market?
Housing markets, yeah. That's permits is mainly things I look at. Employment, yeah. And what else was that, Drew?
Balance of trade,
yeah. Balance of payments. Those are the things that I look at personally. I'm sure Drew looks at the same. I'm sure you as well, Ads. Yeah. For example, I've done some analysis like 2 days ago, and I posted it in my Telegram of the M2 growth, how it's obviously in Feb to March to April to May. There's been a lot of deflation in the US itself, but the growth of M2 has been increasing. So the supply of money. So think of it as like supply demand. The more supply in the system, the weaker the currency gets because it's inflationary. We short during inflation, we buy during deflation. I know that kind of sounds weird because you think as deflation as a bad thing, but for the value of a currency, it's not. And obviously inflation's obviously bad. At the moment, they're starting to withdraw now. So it's becoming more and more deflationary. It's still inflationary, but not as much. That's one of the main indicators I look at. We've got CPI, so that's always going up. It's inflationary regardless. It's been obviously March time. It's been deflationary, but it's still going up. The indicator for myself is saying we're looking to long that part of the dollar, although you can't actually physically long that. It's just giving us an indication. Yeah. And obviously the central bank's balance sheet has been flying up. So that's not a good thing. GDP has gone from like minus 33 to plus 30 something. It's a ridiculous amount. So yeah. June Q2, was it Q2 or Q3? Which one was it, Drew?
Q3, I believe. Q3.
Yeah. Q2 was like minus, and then Q3 was like positive.
Yeah, definitely. Yeah, 3, definitely.
These are the indicators that I look at personally. Obviously, you have to go out and do your own research. Whatever works for myself may not work for you. It may not work for Drew. It may not work for Ads. It may not work for whoever. So actually go out and do your research. But those are the kind of imbalance of payments as well. US has always been in the deficit since God knows how long. And obviously China's been increasing now. Their balance of payments is massively positive because obviously everything that we buy is basically made in China. So they're exporting more than they're mostly importing. This is the balance of trade. So research M2 as well. I'm going to give you stuff to research for the viewers. M2, CPI and PPI. balance of payments. So balance of payments is relatively easy to understand. We've got, well, let me bring it back because I'm going to waffle too much. Let me bring it back
That's fine.
why Australia. So obviously
Yeah.
my students know how I talk about understanding the exports of a currency and why it's increasing or why it's decreasing. So if you look at the AXY, which is the Australian index, CXY, the NXY, which is New Zealand, CXY is Canada. So Canada's exports oil, Australia's is iron, and New Zealand is, I think it's oil. Don't quote me on it. I think it's either oil or gold. Do not quote me on it, please. Don't get all the keyboard warriors. It's either oil or gold. I know if you look at AUD USD, it's flying. So look at the export of the currency as well.
Yeah.
That's very important to understand. So Drew, what would you going to say?
Yeah, to reinforce that, and funny enough, two of my students this week that I was sitting down, I was going over these exact topics. I was going over with them. And I explained to them, and all these, you're speaking about M2, balance of trade, you're speaking about inflation, interest rate, and all of a sudden you can just see someone that's new to the market, they kind of just like shut down all the information coming to the brain. They're just like, oh my God, all this data is eating away at me. And I say to them, and this is, so starting with supply and demand, bringing it back to monetary, like the supply, this market, the money, right? Let's just speak about from a generic way that we will all understand it. I'm Ferrari and I produce 5 Ferraris, one sort of type of Ferrari, but I only produce 5 of them. Now the demand is massive for them and the value of those cars are massive because there's only 5 of them.
250 GTO is a good example of a Ferrari.
Yeah.
Yeah, just 250 GTO is some like very rare Ferrari. It's like 13.
That's old school.
and then all of a sudden I turn around and I say, right, I'm going to make 50 million of them and supply it to the market. Well, then the value of them decreases.
Yeah.
And it's sort of similar with money and that's been put into the market. It's like the more we're putting in, the less valuable it is. Simple as that.
Yeah.
So I know it's different. We didn't start off with 5 Great British pound and now we're putting 50 million in. I know it's a bit different to that, right? But when you're looking at it from a stance of supply and demand, it's as simple as that. Yeah. And then when you look at it from, again, just looking at it from having a chat and generic sort of conversation with someone, if more money is coming into someone's economy, of course the economy is going to strengthen. Now, if you look at the economies that's still up and running, the economies that export, like you said, China, and you're looking at like the Aussie, New Zealand, things like this, if you're looking at economies that are on their feet, they're doing things they were doing prior to lockdown, compared to an economy that's literally shut down in like the biggest tier they've been in, where do you expect that currency or those currencies to match up, And where do you expect, well, which one's going to strengthen, which one's going to weaken? And from there, if you've got a generic understanding of the economies from having a chat about them, then you can implement the economical data, and then it makes sense. And that's another way to attack a currency pair rather than going, right, okay, here's all the economic indicators, go and make a bias. Whereas, in fact, if you look at it from a risk on or risk off stance, you look at it from imports, exports, and you just look at it from a stance where it's like the monetary supply and stuff, you can kind of get a vague idea of what's going on between both economies, and you can create a bias. And then over time, the more experience you get, the more you'll learn about those economies, learn about the economic data, learn about the specifics like the CPI and things. And then all of a sudden, you're away, you're flying, you get it,
Totally, absolutely. And I do agree with you, Drew, as well, and definitely yourself, Mark, because those factors play a massive impact on, the strength or the weakness of the current economic factors that are going on in or that are to do with that currency, for instance. So we're talking about the dollar. Going back to the dollar once again, I look heavily a lot at political factors and economical factors as well. So as we know, obviously, Trump is currently being impeached. For the second time. Currently in the process of it, and nothing has been confirmed as of the time we're shooting this podcast anyway. But coming back down to, how well he did in his time reigning the country. He's not a king. I wouldn't say reigning, in fact, but he did come across as a bit of a, you do this, you do that kind of person. But it is what it is, He did well. He did what he could do. And when he was in charge, they probably had one of the best economies that they've ever had, to be honest, at least in the last 10 years anyway. So why did this take place? If you go now back and look at all of the data that Mark has mentioned, yeah, CPI, PPI, the housing rates, balance sheets of the banks. There's so interest rates, yeah, Feds, Fed rates as well. There's so many different small things that add up, yeah, to what could take place in terms of the strength or weakness with the dollar. So with myself, I always bring a political factor on board as well. And when I'm comparing it to the UK, for instance, as Drew said, which countries have made it out of lockdown and which countries are in the highest tier possible. Well, we know what country he was talking about when he said that, because we're all stuck behind a screen right now. Yeah. But you know where I'm coming from. What do you think of the future? I know this wasn't mentioned by any viewers, but what do you think of the future of the UK at this moment of time? Because this is another reason we're going back to our first topic of mental health. It's uncertainty that is bringing these issues upon people's heads. They don't know. We don't know what is going to take place in the next month or two. Yeah, we're hoping for the best, but what could the future hold for the Great British Pound and our UK economy? What do you guys think?
Good question.
After
you, Drew.
No, honestly, I insist.
No, man, I insist. You first, man.
Okay. Okay. I'm very okay. I would like this. I am.
Put it this way: I'm bearish on the pound right now.
I'm
bearish.
I can't put into words. And as we had this conversation, I believe it was the 4th of January, and so I put my laptop on charge. I couldn't believe that the pound had managed to reach levels like 141, 142 against the yen, right? And I couldn't believe. I mean, I was sat there and I probably ranted to ads for about half hour. I said, how is the Great British Pound trading 141, 142 against the yen in a risk-off environment with the data and everything that's coming out and how much debt we're holding to our heads as an economy? I couldn't believe that we were strengthening. Now you can look at it on a monthly, weekly, daily and go, okay, we're pulling back into regions and this will roll over and whatnot. But as we've seen for a fair amount of time now, it
for
doesn't
3 quarters
sticky.
at least we've been negative, haven't we?
Yeah. So my personal opinion on the pound for the next at least end of Q2, I'm a big bear. And I mean, like, I won't even look for buy setups.
Sorry,
I won't. I mean, the probabilities you're taking upon yourself by taking a buy on the pound. I mean, obviously, I'm on about pound yen here. To me, I'll just sum it up short and sweet because, like Mark, I could go on and rant, but the pound is at levels where it's beautiful to short, in my opinion.
Yeah. I mean, the only pound pair I'll be probably buying is GU. That's probably the only one. Like,
I mean,
it's kind of
against the dollar, it probably is that slight bit stronger. But at the end of the day, we're also in a negative point. I don't know how we're holding up. I really don't. How are we still holding at around 141s, 142s? I don't know.
To just jump in there, and again, I said this to ads literally early January. I said, look, my true value, my fair value for the pound against the yen is around about 135, 136. And that, I think, like, if you're looking at it from a pure exchange rate.
Yeah, I also agree between 136, around 136 is what I would be buying pound up again.
Yeah, and I just think where we are now is well, as I've made clear, it's hard to believe.
Definitely. And I totally agree with that as well. Even our political stance, like I always go back to politics. Firstly, Boris. This guy, Boris. He's an absolute joker, man. He's a joker.
He's a meme page joker, man. He's literally a meme.
They're on it.
Yeah, like this guy, man. Honestly, he doesn't know what he's doing half the time. Yeah, he's like, stay at home, but don't stay at home. Like, he contradicts his own words. He tries to put a point across in the nicest way possible, not trying to hurt everybody out there at the same time. Like, but the way he comes across is absolutely confused. Yeah, he has a point to put. Okay, he's got let's say he gets given this letter that has been agreed by all of members of parliament, okay, yeah, we've all agreed, or the majority of the votes in parliament today have agreed that you need to announce a lockdown tonight. Yeah. So even if he doesn't agree with it, he'll be like, "Mm, we should not be doing this, but we should." Yeah. But today we're going to put you in a lockdown by midnight. That means you are not allowed to go out. Well, you may go out for a bit of exercise, but that you aren't allowed to go out. You know where I'm coming from? He tries to soften the blow every time, whereas somebody like Trump just throws it out there. You're not allowed to go out, period. Yeah. If anyone sees you doing this, you will get locked up, period. End of story. Yeah.
Yeah, just there's no beating around the bush with Trump, and I think that's what we've done too much of.
Definitely.
It's just Boris.
Yes, just Boris, man. He should stay a comedian. I remember him years ago on Top Gear, and he was a hilarious lad when he did come on as a guest on Top Gear. Yeah, he was a hilarious lad at that point. And he had just, released as Boris Bike. So at that point, he was obviously killing it, absolutely killing it, multi-millionaire by then. And he had made a bit of a name in the motor industry, seeing how he was so against cars at the time. But moving forward as time is ticking as well, and this is pretty interesting that a viewer has sent in. So they've actually sent in a question: is day trading profitable? So what I'll do is I'll start and then I'll hand it over to the other guys.
Yeah,
day trading is profitable, but going back to managing your emotions, managing risk at the beginning. Obviously, the next topic will cover this as well, or we may end up mixing these two topics in as well, this topic and the next topic. So is day trading profitable? I believe it is profitable, as every single one of us, 1, 2, 3 of us, are clear indications that it is possible and profitable. However, it doesn't mean every single day you are going to profit. Yeah, it's how you look at things on a long-term outlook. Like, I'll be totally honest to all hundreds and thousands of viewers out there that even every week I possibly also end up having a losing day as well every week. But that's 1 day out of 4. Yeah. The other 4 days out of 5, I end up having a winning day. Yeah. So you also have to look at the negatives and the positives, which Drew heavily emphasized definitely about this point as well. As long as you are looking at how much you could lose compared to how much you could make, yeah, and as long as you are always prepared for the worst case scenario, I believe you will always be profitable. Yeah. So I'll hand it over to you guys. What do you guys think? It's all about, it comes down to how you're managing your money and how you're managing your emotions.
I think that's the biggest point. I think it's mainly the managing the money part, because we'll bring it back to like the risk management, but you see all this conflict of interest out on Instagram or Facebook or YouTube, whatever the hell you do. You'll see, earn £500 guaranteed every single day. So when you hear this guaranteed, when they say guaranteed, that's an instant red flag. Whenever you see that, I see it all the time, guaranteed £1,000 profit in a week. There's no guarantees in trading, investing, cryptocurrencies, whatever you do, there's no guarantee. So you have to always be managing the downside. Okay. So it's the risk management. So using too high leverage is the main killers. Obviously myself, I'm a different kind of trader to you ads. I know you like to be in and out very quickly. I like to hold mine for months. That's just the way I trade. I used to be a day trader. But I think the more lazy I got, as per se, the longer I like to hold it, because I could just hold like a 500 plus pip trade for like a month and a half, and I'll be happy with that. Obviously, I'm not always going to be catching 500 pips. Sometimes I'll be going to 1,000. Sometimes it'll be 200. It just really depends on like the market conditions and stuff. Like at the moment, I'm in GBP Norwegian krone. I'm up about 850 at the moment. I'm aiming for about 1,800. So it's about halfway there. No, not exactly halfway, just before. That's because I'm lazy. I'm a lazy trader. I don't want to be inside the charts every single day. I've been on the charts. I've had a month off. Like I've only just come back, like teaching, like on Monday or Tuesday. I stopped mid December, because you need to have breaks when you trade. Like, especially when you're day trading as well, you need to have breaks. Like, I think it's more to do with the day trading part. You need to have breaks for sure.
To butt in there, I don't think you give yourself enough recognition, Mark, because although you hold monthly trades, me and Ads both know you hound data, right? So the way I'm going to propose this to you is, although your chart activity is low, your data activity is high.
Sure.
So what our chart time is what your data crunching is, I guess, in a way. I mean, probably we're a bit more on the charts because it's just active. We have to be on the charts, you know. But you've got to give yourself some. Just a tap on the back. I wouldn't say lazy is the word. I think you're very strategic and very pinpoint with how you want to conduct yourself in the market. You know your characteristics and you optimize on that.
Yeah,
I suppose that is true. To be fair, I'm always on Excel. I suppose most of the time. So I'll say lazy on the charts, not on the back end.
yeah.
I mean,
it's not on the back end.
That's where my credit definitely goes to you, Mark. You know, there's a lot of reading that you do, a lot of data analyzing, number crunching that you do behind the scenes, and you put all this data together and, you know, end up giving it, well, once you put it together, you've finally found your bias on what is going to take place over the next couple of months. And, you know, you trust your analysis, you trust the data that you've collected, and you trust your own bias, and you end up going in, and holding out, you know, your trades for quite some time, and resulting in very, very profitable outcomes at the end of the day, or at the end of the month, should I say? Because you end up holding for a couple of weeks and a few months.
Appreciate
it. Whereas the way I personally do things is more on a price action basis when I'm day trading. So I see things as a business. For today, let's just say for today, we know the pound has gone up or gone down. Well, today it's pretty much been sideways, dropped a little bit, gone up a bit, and then now it's just settling around the median price at the moment. Yeah. So if you look at today's data, we can use this for tomorrow's data. Even this might only be 100 pip like gap. Yeah, from let's say went up 100 pips, there's only 100 pips between that space. Yeah. Okay, I know tomorrow's price could not be the same 100 pips. Yeah, it could be a lot further. It could be 100, 150 pip range, for instance. Yeah. But are we looking to sell or are we looking to buy? Yeah. Next, I look into where is the discounted rate for selling? Where is the discounted rate for buying? This also comes into money supply and supply and demand. Yeah. Where is the supply at? Where is the demand at of this money? Yeah. Because I have a pretty much a business mind. I run a few businesses myself as well. So I'm one of those people who, if I can get it cheaper, I will end up buying it cheaper. If I can sell it cheaper, or sell it, at a very high, not sell it cheaper, sell it at the best price. Yeah, I will try my best to sell it at that best price and try as close as it comes to that supply area. Yeah, I will, end up taking some shorts around that point because I know, okay, if it goes too high, it definitely can't be worth more than this. So I'm willing to sell it at this point. If it goes to that point, I don't mind, taking out that position and selling it again at this point. Yeah. Rather than, holding two, I'll take out my first position, I'll take the loss on that and find a better price to sell at. And then as it comes down, I'll find the price where it should be settling at, which is kind of in the middle. And I'll take that, whether it's 30, 40, 50 pips. I'm happy with that.
Okay. So what is I've noticed with your strategy ads is you look at like the daily high and like the daily close or something. I think I remember when we were speaking last. What would you say your strategy is in terms of percentage wise? Are you more, I know you're more fundamentally based, but are you like 60-40 or 70-30 or 80-20? Because myself, I'm 80-20.
I also believe I'm about 75-25. Probably Drew would agree with me as well.
I'm like 99-1.
Yeah. Well, actually, I think I'm more like 75-25 actually. I'll stick with that because at the end of the day, it all comes back down to, okay, if we know fundamentals are pushing us, that's the first thing I look at anyway. Fundamentals and data, just like yourself, Mark, just like yourself, Drew. Yeah. Fundamentals and data is going to choose our bias for the day. Yeah. we're not going to go against that because data never lies, numbers don't lie. Yeah. And news can lie, there can be some fake news. Yeah, but we also have to understand how institutions work as well. And they're a business at the end of the day too. So even if negative news does come out, it doesn't potentially mean it's going to push down right now. They're going to look for a money supply, look for stop hunts, yeah, take out everyone, or liquidity grab, should I say. Yeah, do a liquidity grab, make sure there's enough liquidity in the markets for them to drop the price and profit all the way down. Yeah.
100%.
So those are the small things that I look for before entering. But the first major thing is definitely data.
Yeah.
You know, 100%.
Yeah, I think I've got a very similar approach to ads as how we look at the market. And this was just coincidentally, by the way. This wasn't just when I got to know ads and I was like, oh, this is how I sort of look at the markets. And ads was like, this is how I look at the markets. And it just But so yeah, I mean, do I think day trading is profitable? Yes, 100%. I have a very weird, I will admit it's weird how I look at the market, a weird approach. I will look on the monthlies, the weeklies. I will use all my fundamental understanding and current state of understanding to predict, or more so see where value is at for that certain pair. And for example, say I think it's due a 500 pip drop or a 600 pip drop, and I work on round numbers. I'll work on round levels, and I think, okay, we're trading here. I believe value is at there, or that's a fair price for those pair. I could just, like you do, Mark, I could just roll it over on the monthly, take a trade and let it roll. But I know myself, and I know how active I am and how sort of energetic I can be. So I will only hold for around about 2 to 3 days as my average hold. So that for me, I'm scratching to close it then, and that's just me, I'm just sat there and I'm like, I could let it roll, but I like being sort of active. I like being hands-on management with my money. And exactly like ads, I've also had businesses in the past, and it almost is like that security in your head of, right, bank it, cool, let's get back in on a pullback, or let's chart up where we think is the next value or the next discounted level, or where we think. And I'm a big advocate of liquidity and how it drives the whole, well, of course it drives the market. And I will look for liquidity hunts. That is me. That's probably 2/3 of my trades are based upon liquidity hunts or liquidity gathering, I should say.
Yeah.
And yeah, so I will have an understanding of where I think price will eventually end up at, and I will trade accordingly and almost ride the waves of it down to that region.
Yeah.
But yeah, so to answer that, yes, I am a day trader, and I do. Well, I know it's profitable. Yeah, I mean, me and ads can sort of sit here and it's not a matter of thinking,
Yeah. Now that I'm thinking about it, the way what I always tell my students is, because I'm always teaching swings, predicting what the price is going to be 4, 5, 6 months in time, and how long it's going to take there. Especially, like, I think I said 3 months ago. So, I mean, it's 3 months now. AD USD will be at 0.8. So right now it's at 0.77. So I'm not too far off. I had a reason why, but the way I always teach my students is take partials at around 100 pips and then leave the rest to run. So at least you have some money banks. Like if it's something reverses on yourself and goes back to break even, which it happens. That's why risk management is important. Bank it 100 pips, 200 pips, depends how long you're swinging it, and leave the rest to run, because you need to have that assurance in yourself that what you've predicted is going to happen. So yeah, I suppose I take partials in the daily or like a kind of day trading aspects as per se, but yeah, I'd rather hold it because it capture volatility. That's the way I kind of teach it. So the thing is with trading is everybody's different. Like what works for me may not work for ads, may not work for Drew. It's just understanding what's your reasonings. And if somebody else tells you, I'll say buy GJ, which isn't personally. I'd say buy, you'd say sell. What's your reasons? That's your reason. Okay, that sounds fair enough. These are my reasons. I see liquidity here or whatever your reasons are. Everyone's different. So if I, myself as a trader, works this way, doesn't mean you have to do that. Develop your strategy.
Absolutely. I mean, from an aspect of, and I'll give you a prime example. I have 2 students. One, I said, I gave him homework last week. He came back. We had a session. What day is it today? Thursday. We had a session this morning. And I said, okay, right, let's go over your back testing. His homework was back test. Go and find 20 setups of this, 20 setups of that, because he likes these two certain ways of viewing the market. Cool.
Yeah.
So we were going over all his back testing. You know, he'd charted them up. The text was perfect and everything. And I said to him, you understand that your whole back testing was on daily in the 4 hour, don't you? And he was like, just felt natural. I said, right, so you need to understand now that you're going to be holding for days, and you're going to be holding, longer than, don't compare this analysis to your mate that's doing the 15-minute sort of thing, And then I've got another student that won't go above the 4 hour, doesn't like it, hates it.
Yeah.
So now both of them, if they both continue in the path they're heading down, and they both progress at this rate they're at now, they will be very good, profitable traders. But both two different traders, both have the same fundamental understanding, but different ways of interpreting their bias into the market. And I think a big driver of this, and something that will control a lot of how you articulate yourself in the markets, is knowing yourself and knowing your characteristics. Just like me and ads, we know we don't like holding. we know we don't, and we know what works for us. Whereas, the guy this morning was saying, I work night shifts and things like this, so holding is perfect. And it takes, he was saying, the more I'm at the charts, the more I feel like it would get too clouded, and I see clearly the less I'm on the charts and stuff. Okay, if that's you, let's get going with it, and that's, again, characteristics.
Yeah, 100%.
I totally agree as well. It comes back to, your own personality. Yeah. How you are able to, day trade, or however you trade, whatever let's say you're a very active person, that will also reflect in your trading as well. You'll also be very active in the markets, which means you will have to cut it down on a very shorter term time span. Yeah, it means you'll actively have to bank profits. Otherwise, you personally will not be satisfied. No matter what your profits are, you will not be satisfied unless you're banking them daily. And that's, because I have a very ongoing lifestyle, like a very busy lifestyle. And Drew will confirm that as well. Like, from morning till evening, we're on the go all the time. There's always something to do at all times. Yeah. Next thing to do. Only sometimes we get a chance to sit down, eat, and then carry on. Yeah. So whereas some people are a lot more calmer, a lot more zen, they have less things to do. But they also, it could be a number of factors. We could also be swing traders. Does that make sense? Because we have so many different things to do that we can't afford to sit there in front of charts at all times.
Yeah.
So we could easily be swing traders at the same time.
No, you won GU from 0.
Yeah, my last year's one from GU.
Yeah.
100 pips.
Yeah, I remember.
Yeah. And the reason for that, which I held for about 3 months, 4 months.
Yeah,
Drew, I caught 1,500 pips on one trade last year.
Big man.
Yeah. And the reason why I held that is because GU dropped to a very low point that I haven't seen it in about. I haven't
1.15, something like that.
1.15. Yeah, I haven't seen it like that in a very long time. I don't think I've seen it like that in too long. So I was like, this is the perfect buy. Yeah. It's like seeing Bitcoin at £10 again.
So, to reinforce that, and the thing that I try and make, again, people understand in the markets is the amount of people that come to me and they're like, oh, based upon this Ichimoku cloud and this moving average cross, right? And I say to them, right, and I will literally say to them, but do you think that's good value or bad value? Because that's what people forget. This is an exchange rate.
Yeah.
It's literally an exchange rate. So, I know people out there, a few clients of the fund that they'll, I get phone calls daily. I'm looking to buy like 200,000 euros, right? I'm buying it for my pound account. Is that, I think the exchange rate is a bit heavy or whatnot, right? There's people that participate in the FX market that aren't traders. And what we need to understand is there's a fundamental value. Is that expensive or is that cheap? And Ads is an advocate of that. That was so cheap to buy the pound in that level, against the dollar. And then he knew this, so he held it, and it was very out of character, but it was because of how we trade. It was out of character to hold that for 1,500 pips, but look at it, it worked out. It's because you knew, wow, that is so cheap value.
Exactly, 100%. And if you do notice certain things in the markets and your gut just tells you, just go for it, because other people are not thinking the same. They're going to be looking, once again, like Drew said, at well, these don't work for me. I'm not cussing anyone who does use these, but I don't look at Ichimoku clouds, and that will not indicate me putting my money on the line for an Ichimoku cloud. Same with the moving average, you know. I will not justify putting money on the line just based on a on a moving average line, for instance. Yeah, they work for others though. Others use it as indications. Even my partner loves it. Yeah,
Yeah.
and he loves using moving averages as a good indication to see the general medium between price. But for me, that it just doesn't work. So, you know, whatever works for you, solidify
Yeah.
that.
100%. I mean, last time I used an Ichimoku cloud or a moving average, I think I blew 6K in account. So I'll stick to price action. I'll stick to price action. I'll stick to liquidity. I'll stick to confirmed previous chart history. You know?
Yeah, I agree. But going back to our first point again, it could work for Ichimoku clouds if they're used in the right way. They could work for some people with the correct risk management. If you're using 1 to 2, 1 to 3, 1 to 4, it might not work that once, but it will work the other 3, 4 times. Does that make sense? But for me, it's just not me. So, you know, I just personally won't use it. And same with Drew, same with Mark. But there are so many other traders out there that really do end up smashing it because they've built a strategy around their own emotions, around their own psychology, around their own lifestyle, that this works around them, you know, their own mindset at the end of the day. Now, we are coming up to the end of time, and one last topic, which is has been sent in by a viewer as well. I'll let Mark go on about this a lot more. I'll start off anyway, but it's about binary options and what we think of it.
Binary options.
Yeah. So I'll kick it off first anyway. My experience with binary options, well, they've just given us a word, binary options, and talk about it. They haven't said, is it good, is it bad, you know, so we can expand quite far in terms of what we can say about binary options. Well, my personal experience with binary options is I actually started trading with binary options. I came across trading through binary options, in fact. And well, actually, I came across it in plus 500, and then I lost some money, moved on to binary options as it was a lot quicker, and I found it a lot easier. Yeah, at that point anyway. But then I realized after a while, it's a lot like gambling. First of all, because even if you are on the right side of the market, even if your bias is correct, you will still get your money taken away. Why? Because it just isn't above that point. Yeah, at that time. Yeah. And we all know with trading and with forex and equities and, you know, all different kinds of assets out there, including cryptos as well, we can't set a time to when it's going to hit our target. There is no time limit. It could hit it tonight, it could hit it in the next 5 minutes, it could hit it in 3-4 days, it could hit it next month. We just don't know when it will flow to that certain target and that certain area. And that is something you're always constantly, or I was always constantly fighting when it came down to binary options. I was like, okay, if it's moved this much in the last 10 minutes, in the next 10 minutes, it possibly could do exactly the same, move again 10 minutes in that same direction, right? But obviously, most of the time, 9 times out of 10, I was totally wrong. Maybe the 1 time out of 10, I was lucky, but time limits do not work when it comes down to trading. Patience is the biggest key. And that's something it suppresses. Binary options did end up suppressing my patience a hell of a lot. I became a less patient person, in fact. Whereas patience, as we all know, Warren Buffett, you know, one of the biggest investors of all time, patience is the only thing that got him where he is today. He's been actually compounding his money for the last 50 years. Imagine where we will be if we could compound our money for the next 50 years. We'd be, you know, somewhere near his place. But most people can't even look at it. They don't even want to compound for the next 5 months. Let alone 50 years. And that is where you see the success on his face. You see the success in his life because he has stuck out that patience to ride it out all that time. Does that make sense? So my opinion on binary options, it's not for me. It might be for others. I'm not putting anybody down who does trade binary options. But it's not the best way of investing your money. It's not the best place to put your money. And another reason for that is because it is not regulated. Yeah. Any binary option broker is not regulated. They can do anything. And I'll quickly tell you a story before I do hand it on to Drew and Mark. So once I was opening two charts, I opened a Forex chart and I opened a binary chart. Yeah. And I placed a trade on the binary chart, which had lasted about 5 minutes, I think, because there's always a time limit where you have to choose when you want that trade to close. Yeah. And I did a buy, and everything was going correctly, including on the Forex chart as well, because I had analyzed it on the minute chart on the Forex side, and I'd analyzed it on the minute chart and I'd mimicked that analysis onto my binary. Yeah. So I was like, okay, if it's in a trend, yeah, and it's an active time of the day, it probably will end up going there in the next 5 minutes. So it was going there. Yeah, it was on its way there. It was on its way there. It was on its way there. It was the last second the broker realized, you know what, we want to take him out. Yeah, he's right, but we don't want him to take this money. And they instantly spiked the candle down on the last 2 seconds. But on the Forex chart, it's not showing any spike downwards. It's showing a continuation of the trend. So literally they can do whatever they want. Yeah. When you're using their platforms, they can do whatever they want. Whereas in terms of MetaTrader, it's run by MetaQuotes, which is, cannot be manipulated. First of all, brokers cannot manipulate MetaQuotes, and MetaQuotes is directly ticked off. Well, they get their ticking, and timing of the indice and the stock market directly. They allocate all this data together, rather than just taking data from one place. So they median it out and then give out that data on the charts behind MetaTrader 4 and 5 and all the other MetaTraders. 3 I never heard of, but I believe there probably was such thing one day. However, that's my experience with binary options. I'm not saying it's bad, I'm not saying it's good, it just isn't for me. And if you want to be a actual trader or a proper trader, you will actually grow a lot further in terms of your personal growth, in terms of your personal development, in terms of your own personal skills, a lot further in the Forex market than you will in a binary options trading market. Now, what are your guys' views?
I mean,
we'll give it to Mark last. He's got
I'm gonna keep this short and sweet. Ads was very humble and very sort of I'm not going to say it's good, I'm not going to say it's bad. I'll look everyone in the eye that's watching this now and say it is a joke. I mean, I'm just putting it straight out there, right? I'm just being lethal with it. Like Ad said, Ad's laughing because someone got to say it, right? And I'm being deadly honest here, and I mean slate me in the comments. I'm hands in the air, shoot me down, right? It's gambling. It's gambling. As Ad said, if they want to spike you out and an unregulated broker wants to wipe your capital, they will. End of. Completely different ball game with FX. Completely different ball game with like commodities, anything, spot market trading. You're getting that contract, and you've got some security behind it because it's a regulated entity and things like this, right? And that is my short and sweet opinion on it. I won't go near it. I don't believe it has any sustainability long term. Do I think you can create a career out of it? No. Do I think it's something that will generate you an income that would I be happy if I had a mortgage, a wife, 2 kids, and I was a binary option trader? I'm sorry, no. And that is how I'm going to leave it. It's not a career. It's not sustainable. And I'll pass this over to Mark to probably reinforce this.
Just quickly, I just want to put in something as well. It's also known as high frequency trading, as some people call it, whereas high frequency trading has a massive toll on your mindset. So it definitely is not, sustainable long term. As Drew said, if you've got wife and kids, it's going to bring serious stress on your head. Yeah, you doing high frequency trading, plus the stress of kids and marriage, it's going to build up and take its toll on you. And one day you just want to kill yourself.
Legit. Legit. You're binary options. Okay, so basically what Drew said is exactly what I think about it. But the way I'm seeing it right now on social media is it's getting pushed as a quick get rich quick money. Earn money in minutes. Bullshit. Okay. It's not this. Trust me, if you see this, just put a clown emoji, reply to it, clown emoji, and just send it, because it's not. Okay. Yes, you might make some money. I'm not saying you're not. You might make some, but on the average, you got to think about the long term. What's going to happen in a year's time? Are you going to be a profitable binary options trader? I don't know one person who's profitable from binary options. Now, options trading is completely different.
Yeah.
And predicting price is going to be above this within 3 months or within 6 months or within a year. That's options. Okay. This is like a hedge against volatility and stuff. But binary is 1 minute. So I've tried it. Okay. I've tried it. I can't remember the broker I tried it on, but I tried it and it was like, how do you read binary options? This line has to cross above this, and you have to see all the graph. I think it was a graph, and it was like all the people who are buying right now and all the people who are selling. 60% of people are buying. Okay, you got to buy it. And then I got spiked down. I was like, okay, well, why did I lose if 60% of people are buying? So it's basically gambling. Just whack your money into a roulette and you'll probably earn more, I think, from that.
Yeah, put it on red and you're better off.
Yeah, definitely. My favorite color is red as well. So yeah, and an extra one for me if you guys want to do that too. You know what? I actually tried not going back onto, but just testing for some reason. A few months ago, I think it was around October or in September, I tried signing up to binary again and trying out a demo because it kept popping up in my face, and I was like, all right, let's see what this broker's about now. And see what, unregulated actions they're going to put across. So I didn't put any money in anyway. I was playing around with it, and I think after about half an hour, I was like, this is the reason why I don't trade binary. And you know what? It felt so much like I was in a casino. It felt like I was on a roulette table, for instance. Yeah, I'm basically guessing. Yeah, even no matter what analysis you're using, none of it works.
I'm pretty sure, again, shoot me down in the comments if you want. I'm pretty sure you would have more of a statistical probability of creating an income or profiting by spreading your chips across the numbers. Like, when you go you split it into 4, so it's like 25%. Or if you did that properly, calculated that over whatever, then you would binary options trading.
Yeah, I agree. Definitely there is higher probability and higher returns in casino roulette if you're doing that.
To summarize, it's basically get down the
be humble to say it is gambling. It's basically saying it might work or it might not. It won't work. All right.
And since your emotions are running so high, it don't work, man. It doesn't work because you're not thinking with your logic anymore. You're thinking with your emotions, and then you go into that gambling state where you're just throwing it away. And you're not thinking properly. Yeah, but that is absolutely it from us today. Thank you so much to our guest, Drew. It's an absolute pleasure. Guys, if you think he should come back on another session, make sure you type it in the comments box below that we want Drew back on again. It has been an absolute pleasure gaining all the experience and knowledge that he has to provide us as well. We will also bring so many other guests on as well. But Drew, you probably have been or are going to be one of our guests or one of our greatest guests so far. If you want to join us regularly, feel completely free to do so. 100%. It's always a great conversation, even when I pick up the phone and speak to Drew, even when I'm on WhatsApp and speaking to Drew, to be honest. It's always a really, really good conversation in person when we're on the golf course. We always have a really, really good intellectual conversation, and we always walk out at the end of the day with so much more knowledge than we had before we started the day, which I always appreciate every single time, Drew. So thank you so much. Once again, main man Mark, no need for any amazing words. No need for any amazing words for Mark. His personality gives it away. his knowledge gives it away himself. But once again, thank every single one of you for plugging into this session. And you know what? Type it in the comments box below. Make sure you send us in your suggestions for the next session, and we will definitely, obviously, pick up all of your suggestions, all of your comments. We read through every single one of them anyway. And you know, as today's session, our next session will also be based on viewers, topics only. So once again, thank you all for plugging in, and we will definitely catch you guys on the next one. Also, don't forget to like, subscribe, and comment. Take care.
Take care.
Take care, guys.